Not 100, not 50, not 20, but $2 per day invested into something like the SCHD ETF, the Schwab US Dividend Equity ETF, could not only turn into a surprisingly crazy amount of wealth later on, but also most of you guys watching this video could probably afford that amount of capital to be deployed. Now in this video, I want to showcase one of my personal favorite ETFs when it comes to building wealth as far as net worth goes, but along with that, massive dividends over time. And I'm going to show you guys the exact math of what would happen if an investor invested just $2 per day long-term into an ETF that historically has went up in price and also has paid investors like myself more and more dividend income over time. Now, like I said earlier, the results are honestly shocking even to myself, so make sure to stick around until the end. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, first off, the main reason I wanted to make a video like this is that because especially a lot of newer investors, I've been where you have been, where you open up a portfolio, you don't have all that much cash balance to play with, maybe you're just getting your first or second job, and with the cost of living just consistently moving up, it's really hard to find extra money to stuff away in a long-term portfolio that feels like it's going to take forever to grow anyway. But I promise you, at least going off of historical numbers, it's 1000% worth at least stashing away a little bit of money, even some spare change, into high quality assets like this one, for example, because over a long enough time horizon, the results can be shocking. Now for this video's example, we're utilizing the SCHD ETF, which like I said, historically has offered investors capital appreciation, but also massive dividend increases, which are really going to help you build out a compounding snowball over time. Now the investment objective for SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now this index is comprised of different dividend paying companies that all have had to get through multiple different screenings, which means the holdings in this ETF are at least somewhat high quality. Now the fund's highlights as a straightforward low-cost fund which costs 0.06% to hold on to, and the fund can serve as part of the core or complement in a diversified portfolio. It tracks an index like we were talking about, focused on quality and sustainability of dividends. And this ETF is one of the most popular across the entire market with over $61 billion in total net assets. So I'm not some genius that came across SCHD. I'm not the first one to talk about this one, obviously, but this ETF is one of the largest holdings in my portfolio for all the reasons we talked about. Now, just to get through the basics, we're talking about in this video to buy $2 per day of this ETF. The ETF currently costs just under $30 per share as of filming this video. Now, $2 per day could be deployed with many different brokerages that allow fractional buying, or of course, you could just save up enough money to buy $2 worth of this ETF, meaning that you save around $15 or so worth of cash balance. Now, again, if you're watching this video and you don't have all that much cash balance in your portfolio, and there's so many different stocks or ETFs that you want to purchase, but again, the cash balance is sort of low, I still want to urge you guys to invest in high quality assets as soon and as early as possible, especially ones, like I said, historically offer a high quality strategy and an objective that you personally like. It doesn't have to be SCHD, of course, but invest into high quality assets that consistently have went up over time and paid more and more in dividend income. Because even if it's a small amount of money, that can turn into a boatload of cash later on. Take this, for example, around 10 years ago, SCHD was trading at around $13 or so per share. Now it's trading at over double that. So for every single dollar that you put into SCHD back then, you not only got paid dividends along the entire way, but also you've over doubled your investment over the last decade. Now, one of the main reasons SCHD is a great example to build a massive compounding snowball when it comes to a long-term portfolio, in my opinion, is this right here. The ETF, like we talked about, has went up over time as far as price goes, but also this ETF offers around a 3.31% dividend yield. Now, this means that for every single dollar that you buy of SCHD, you're getting back around 3.31 cents. Or for every $100 that you purchase of SCHD, every single year, they're going to pay you around $3.31. Now, what's magical about this, though, this ETF not only has paid more in dividends over time, but more to the tune of 9, 10, 11, 12%. And again, to go off the example that we talked about a minute ago, back in 2014, for every single share of SCHD that you owned, you're getting paid around 8 or 9 cents per share. Now take that 10 years later, you're talking 27 cents, 25 cents per share. So over the last decade, you not only doubled your investment, but now you're getting paid almost triple as much in income every single quarter. Now, this is going to be key when it comes to building a long-term portfolio, because if you buy into something, reinvest those dividends into more shares of it, consistently buy more shares of it with your cash balance, and just sit on the portfolio, let it do its thing. The portfolio is not only going to grow over time because something like SCHD has grown significantly over time, but also the portfolio is going to pay you more and more income consistently. But it's time to get down to the bottom of it. What would a $730 annual contribution into SCHD or $2 per day turn into later on? So we're going to do a few different examples, and I just want to showcase the power of something like this long term. A $10,000 starting principal and then just $2 every single day, which is $730 per year. With SCHD yielding around 3.31%, an expected annual dividend increase at around 11%, which is what we've seen over multiple different time frames. 5% expected annual share price appreciation, 30 years invested. The distribution frequency is going to be quarterly, and DRIP is going to be turned on, which means you're going to be reinvesting all those dividends back into more and more and more shares. Well, the results are in, and with a $10,000 portfolio, right off the bat, you're going to earn around $335 per year in dividends, but with that next $2 per day contribution, by year number 2, we're up to $11.5K. Now, it's obviously going to take several years to build out a portfolio that's going to be substantial with only $10K invested and only $2 per day, but again, just to get the point across, by 10 years in, $30,000 plus from a $10,000 start and over $1,600 per year in dividends. Now moving right along to see what heights this portfolio can reach if an investor just stayed invested, like I said, and let the power of compounding do its thing. 15 years in, we're up to $54,000 and $4,000 plus per year in dividends. But now at this point, with over $4,000 of dividends coming in, that's a massive sum of money to be reinvested into more shares of the ETF that, you guessed it, are going to pay you more dividends moving forward. Now by 20 years in, this portfolio would surpass $100K and almost $10,000 per year in dividends. All the way at the bottom with a $10,000 investment and then just $2 plus per day, this portfolio would surpass $554,000 and $81,000 plus per year in dividends. Now, I know what you're probably saying, some of you guys are saying that sounds too good to be true. Who knows if SCHD is going to continue to pay out 11% in annual dividend increases every single year, and who knows this and who knows that. You're 100% correct. But even still, just going off of a $10,000 investment and $2 every single day, there's no excuse out there now to not build massive wealth, even if you have a small cash balance to play with. And speaking of small cash balance, even with a $5,000 starting principal and still $2 per day every single day. And again, with this example, we're not including any other annual contributions. So let's say 1 year you want to invest an extra $1,000, which again is still relatively doable for most investors. For this example, with just $5,000 invested and $2 per day, this portfolio after 30 years would still surpass over $390,000 and over $57,000 per year in dividends. So the point of this video is not to tell you to invest $2 per day into SCHD or to invest a $5,000, $10,000 starting principal into this ETF per se, but just to showcase the power of compounding over time and just show especially newer investors that came across this video what even a small cash balance could turn into later on, because I know how it feels starting off building a portfolio which is $100 here. It feels like the portfolio is never going to grow, but over time, as long as you're invested and as long as you invest in high quality assets, the portfolio has the potential to turn into a massive boatload of money later on. So now that we went through SCHD and I shared with you guys the reasons and along with that the math on how just a $2 per day investment into an ETF that's powerful like this one could turn into a boatload of capital later on, I lastly want to hear from you guys down below. When it comes to long-term investing, what's the #1 stock and or ETF that you're focused on as of right now? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.